Oh man, so a big day for Bitcoin, officially getting the breakout from a bearish continuation pattern. This is huge. What does it mean for the Bitcoin price? What does it mean short, medium and long term? We've got a whole bunch of data to go through today. I'm going to be giving you my exact price levels of where I think the Bitcoin price can go and what we need to be wary about at which price point. So make sure you hit the like button. Don't forget to subscribe. As always, if you want to buy any of these, if you want to trade any of these moves, you can do so using BYBIT or BitGet. My affiliate links which support the channel are links in the description with bonuses for all of you guys. Now guys, it is 40 degrees here in London. My computer has just overheated and packed in. I've had to order one of those cooling kits for it. We've got insulated buildings. We don't have AC in the UK because we're just not used to it. Normally it rains pretty much every single day here. And now in Europe, I don't know if you've heard, but there are like wild bushfires here in the UK and in Europe. Insane stuff. But another thing that's super hot right now is Bitcoin. Because yesterday, we were looking at this candle yesterday and we were looking at it and saying, okay, it looks good, a nice big strong candle, but I want to see that volume come in and we need that close above. And indeed we got the close above. The bears did try a last ditch push to push us back down. You could see that intraday there, but the bulls managed to hold out there. Now we need to understand, why did the price start wicking down yesterday? It was because of the equity markets, okay? The equity markets had a really strong day yesterday, which allowed Bitcoin to have a strong day as well. But the equity markets started to weaken towards the end of the day. They flip-flopped, and therefore the bears on Bitcoin started to come back in as well. But luckily, we saw another green day today, confirming now this official breakout from this bearish continuation pattern. And now we can look to the next price targets of this move. I mean, very crudely, if you want to take the measured move on a move like this, you take the width of the channel and you put it at the point of the breakout, which with my fat fingers I won't be able to do super accurately, but just very roughly, this should take you up to about 24,900, 25,000. But there is a bunch of resistance at around the 24,000 level. I'm going to show you why, if we break the 24,000 level, things can get even more exciting from here. But big but, and I hope you guys can understand the nuance here. For those of you who are moon boys and want, are we long, are we short, just one direction only, not the channel for you. The nuance here is we are in a bearish trend. Please respect that. Okay, I'm gonna show you that one more time, guys. We are in a bearish trend. Let's bring out the EMA ribbon, and I have to show you this is still a bearish trend, but the excitement is around this. We haven't been this close to flipping our EMA ribbon for a long time, ever since we broke down from here, from at about the 45,000 level. At this 45,000 level in April, we fell below our EMA ribbon, and ever since then, we've been bearish. We've tried to run up into our ribbon, we've got rejected. We ran up into our ribbon there, we got rejected. So for the first time here, after a consolidation where we were thinking we would head to the downside, we've shown some strength. So even if we're unable to break super high right now, it's really positive that we didn't break to the downside. That's the way we need to look at it right now. It's very positive that after 3 bear flags, every time consolidating, falling to the downside, consolidating, we're finally saying enough is enough. We're able to show some strength from the bulls. Now, what do we need to look at? Well, what we need to look at is we need to look at the CMA ribbon. And if we can close the CMA ribbon, and I've been saying this for a while now, above 24,000, if we can get a daily candle close above 24,000, that is huge. That then means we've officially turned our EMA ribbon bullish, and we can expect an extended move to the upside. So this move we're getting from our channel up towards 24,000, that's a freebie, right? That's a nice big move here, a breakout from the bear flag. You can trade that, guys, using the links in the description. But then once we get to that 24,000 mark, once we get into our EMA ribbon like we are now, what is going to happen? That's what we need to understand, is what is going to happen here. Are the bears going to come back in with vengeance and throw us back to the downside? Or can, as I've just described, we get that close above that daily EMA? Because we've shown that historically, every time we get a nice strong close above our EMA ribbon, we do get a nice big move to the upside. Okay, you can see that that's how EMA ribbons behave. Once you get a nice close above your EMA ribbon, it's more likely you're going to have a strong impulse move to the upside. So very good news from there. Now, another bit of resistance I want to share with you guys. I'm going to have to take you across to this chart, and I'm going to turn off the EMA ribbon. I'm going to bring out the 200-week moving average, and I've spoken about this a few times with you guys. Remember, really important level, right? This 200-week moving average Everybody respects it. It was the ultimate support where every time Bitcoin would continue to bounce from it. But then what happened? Just 5 weeks ago, we broke to the downside and we closed below, and we had a month below our 200-week moving average. But now, this week, a strong week, is taking us through our 200-week moving average, and that is what's huge right now, because that 200-week moving average is sitting at 22,700, and it acted as resistance yesterday, and it got me thinking, maybe that 200-week moving average is acting as resistance, but we're getting that push through now. And if we can hold this weekly candle above it, like how the weekly candle looks right there, if we can finish off the week, which is still, guys, another 5 days, right? We've got still got the rest of this week, but if we can close back above it, that would be a really good sign that we've bottomed out, we've managed to create this low, and we're ready now to get back above. But we need to take this step by step. We cannot make impulsive decisions because, as I've shown you from the daily chart, we are officially bearish, okay? So I'm going to respect the bulls. We've been hit too many times for me to say I'm not respecting the bears right now. I'm going to respect the bears. I'm going to show you just one more time. Let's come back to the daily chart. Let's bring out our EMA ribbon. Let's pop me out of the way there. Let's bring out the EMA ribbon, and we are still bearish. Ever so close to flipping bullish, but we are still bearish on there. So until that's done, until we flip back bullish, then we can say, okay, we got some room now to start heading up towards this next resistance area here, which is between 28,000 and to the top side, that 32 range. That 28 to 32 range is our next level of resistance once we clear this market, and that should be fairly easy for us to run up. And why do I say easy? Because we collapse just as quickly. Look at the volume profile, very weak here. So on the upside, we should be able to pick that up just as quickly because it's very thinly traded. But once we get to this 30 mark, then we have to reevaluate to see, okay, what is happening from there. Okay, so that's what we're seeing in the technicals on the Bitcoin chart. Now, I want to bring into context some of the fundamentals as well. We need to look at the US market, and we can see the US market is rallying today. 2% on the Dow, 2.5 on the S&P, NASDAQ up almost 3%. These are huge moves intraday at the time of recording here on the equity markets. Very important. If these guys flip-flop, if the equity markets flip-flop, it will have an impact on Bitcoin. Bitcoin will go risk-off again, and we'll see that sell-off just like we saw yesterday in the equity markets. So in order to understand if that's going to happen, we need to understand what's going on. And the equity markets are rallying on better than expected earnings, okay? So they're betting that the majority of companies are going to deliver better than expected earnings, and we can have a brief relief rally, okay? Brief. And brief being this period of the moment we've got now. And the reason I say that is we've got a bunch of important dates coming up, which I've got jotted down on my post-it note, which you guys need to jot down right now. FOMC meeting on the 27th of this month. Okay, that is 8 days away, 6 trading days away that we get the next FOMC meeting. The market has priced in 35% of the market has priced in a full 100 basis point interest rate hike. 65% of the market is priced in just 75 basis points, and that is why we're seeing a little bit of a rally right now, because previously the market had all but priced in a full percentage increase after the CPI reading. Okay, so this is very important. If this stays as it is between now and the 27th, and the Fed go ahead with a full percentage point increase, the markets will fall, okay? The markets are only expecting, to an extent, the 75 basis points. So that's very, very important. Also, we get retail inventory data on the 27th. GDP figure comes out on the 28th. Very, very important, okay, guys? GDP figure, let me just find that for you. Here we go. GDP figure coming out officially, next release, July the 28th, okay? The previous reading was negative 1.6. What does that mean? Well, if Q2 is negative, that is officially 2 negative quarters in a row, which officially defines a recession. So what does that mean? Well, if we're officially in a recession, this is going to be plastered over the news. Consumer sentiment will fall. It will affect how purchases happen. Aggregate demand starts to fall, and it affects companies' demand and therefore earnings. Okay, so we would officially be in a recession. Now, that is something we have to watch out for. Now, some of the early predictions, some are saying, St. Louis are saying, oh, we're going to be fine. It's a growth quarter. They're slightly more bullish generally. And then you've had the Atlanta reading, the estimate, which is saying that maybe we'll be hovering positive or slightly negative. Now remember, if that comes in as positive, we're not officially in a recession, right? Because you have a negative and then a positive. But the economy is still weak, right? So we need to keep that in mind and keep that at the back front of our mind, that we're not just suddenly going to move back to all-time highs right now, because the cloudy skies haven't resolved themselves. Yes, we can have a relief rally. The markets are having relief rally. Bitcoin can have a relief rally. No problem at all. Let's trade it. Let's enjoy it. But let's keep our cautious hat on just in case we need to revisit some of these levels again, do we have our dry powder on the side? Also, let's take a look at fear and greed index. The first time we're back up to fear, away from extreme fear, in a very long time. And again, just last 2 days, guys, if you guys were watching my videos for the last few months, nobody was here, right? Nobody's watching crypto content, nobody was interested, and now you're seeing the FOMO come in, now you're seeing the tourists come in. So keep a level head, let the data lead you, don't fall for green candle disease, do not chase the green candles, be patient, follow your, leave your emotions at the door, follow the rational, pragmatic route. Very, very important. Let the data lead you. Guys, if you haven't watched my video from earlier on what happened with Celsius and their court hearing, you're going to want to watch that one because it's an absolute joke what they're doing over at Celsius in terms of trying to say that the mining is going to help them out of this situation. So go watch that video where I have a nice rant to and aimed at Celsius. But other than that, guys, let's continue to monitor what happens here in the charts. Let's stay pragmatic, right? That's the key right now. Yes, we can enjoy this rally. Yes, we can have this run up, but let's understand we're in a bearish trend until we close above 24,000, flip our daily positive, then things can start to change. Okay, now can we run up to 30? Can we run up to this next level of resistance up here? Good. Let's take it step by step and just wash out all these moon boys, right? Wash out all these boys that every single time you watch one of their YouTube videos, somehow they always have a long position. They always have a long position open. So ultimately, one day their video is going to be right, I guess, yeah? And then equally, you get those bears who are just always telling you that Bitcoin's going to go to 5,000. So you need to ignore those and follow pragmatic people who give you the next step, each step by step, and that's what we need to do. Let's take this step by step. There's no point in me talking about 64,000 Bitcoin. There's no point in me talking about 69,000 or all-time highs. Let's focus on 24,000. Let's focus on 30 and see where we get to, breaking each of these structures one by one. Hope you guys enjoyed this video as always. Don't forget to smash up the like button and subscribe. Do check out BYBIT and BitGet, links in the description. I'm gonna go wash my face because I'm boiling hot. I've turned the fan off as well because it makes a bunch of noise here recording these videos. Go and watch my Celsius video from earlier here, and I'll see you in the next one.